Hello grad 12s, I hope you're well. Today I'm going to be talking to you about companies, analysis and interpretation. Last time when I spoke to you about companies' unique transactions, I started off by letting you know that about teaching you the process that we take when we are recording transactions. So I said that we start with a journal, then we take it to a ledger, then we take it to the trial balance, and then we take it to financial statements. But everything that we do in accounting always has a resulting meaning and it has a purpose. And so when we come to analysis and interpretation, we look into why we make all of these statements, why we go through that process that seems tedious, so that we can get to here where we analyze and use that information to make future decisions. So the process after we have financial statements, if you look at my board, is we first go through financial statements. Then we decide on a financial indicator to use. Then we choose a formula that is appropriate for that indicator. We calculate to get a result. And then we use that result to determine a trend or a pattern. So then you'll find whether there's an increase or a decrease in a percentage or in an amount or in price. Then we make a comment as accountants as to what that increase or decrease or what that trend or pattern means. And then we make a decision as to so we make a decision or recommend or advise something to find a way to run our business better in the next financial period, whether that be to stay on track with the things we've been doing because the results are good, or to make changes to improve our trend or pattern, or to basically find ways to improve the running of the business, right? So what is interpretation? Interpretation is a process that extracts information from a company's financial statements. I just abbreviated that, but you know it's financial statements, which are interpreted to meet a particular need at a particular point in time. So what does this mean? It means that we take a time to interpret our financial statements so that they can be used to make those decisions that we spoke about at a particular time when they are deemed needed. Then we move to why we interpret or analyze our financial statements and our documents. So we interpret our financial information so that we can provide information that is useful for the purpose of decision making. This is very important information for you to keep in mind. It's very important to remember that we don't account just for the sake of keeping a record. We do account to keep record, yes. Then we account so that we have comparison. We can compare and you'll see in the next lesson that we compare we compare between the year before and the current year, and we compare with other businesses for some specific indicators and some specific basically our financial indicators. So we don't do anything for the sake of. And the accounting process is long in the sense that there's the documents, there's the initial transaction in the operation of the business, or the financing or investing of the business, which we spoke about before. And then there is the travel that the transaction takes, which is that journal situation that I was telling you about. And then there is the process where we analyze the information and interpret the information, where we say, okay, this is what we saw during the year 2020. We had an increase in this, or we calculated that our prices we reached our break-even point at this point. So all of that information helps at the end of the day with decision making, and I will explain that further for you in the next video. Other than that, I hope that you guys are preparing, and like I said in the other videos as well, your past papers are your best friend, and I hope that this helped, and I will see you in the next video. Thank you. Bye.